Voyager gets initial green light for a 1 billion asset sale to Binance US. Staying with Binance, the CEO outlines ambitious plans to grow headcount by up to 30% in 2023. A concept recently embraced by Visa could make Ethereum wallets significantly more user-friendly. Optimism and Arbitrum flip Ethereum in combined transaction volume. Gemini officially terminates crypto earn program amid DCG Genesis dispute. Hello, everybody, and welcome to the Assets of Value podcast. Today, on 11th of January, and every day, we connect to share our insights and perspectives on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast not to be taken as legal or financial advice. Let's jump straight into it. Abe, what is the market looking like today? Are we seeing a pullback?
Yes, Shruab, the momentum we had from the beginning of the week was not sustainable because you saw altcoins were pumping hard. We saw 30 to 50% movements from even high cap coins like Gala Games, Solana, and Aptos. Also, there was not enough catalyst to sustain this moment. When people saw that their DCA investments from the bear zone increased to 30 to 50% in value, they took profits. And I think most of the investors in the space are long term investors and they know how to play their game. They are just taking profits, they are reinvesting into Bitcoin. That's why you see Bitcoin is not moving at all. Bitcoin is steadily, slowly growing while the altcoins are bleeding, even though Bitcoin dominance is getting low. This is a special situation, and you can only witness this in a bear market.
Looking at the token prices across the board, it's pretty flat, not much movement either side, a few percentage here and there. I think the biggest mover on the downside is Lido, nearly dropping by 10%, followed by Aptos, like you mentioned. Let's move over to Binance. Binance is making the headlines again. This time, it seems like it's positive news as the Voyager deal is getting a green light of a 1 billion asset sale to Binance US. Who wins in such a deal?
Of course, Binance is the winner here. Binance is letting Voyager to have liquidity, have assurance of a solid business so that Voyager customers can get their funds back. First thing, it will build reputation for Binance US in the US market. Second thing, Binance is acquiring a highly profitable, highly trustworthy business in the US for such a cheap amount. Third thing is Binance is starting to ascertain dominance into the US space because now that FTX is not existing anymore and Coinbase is slowly growing because it has a lot of problems internally, Binance sees this as a massive opportunity to expand its network. So I should say this is a win-win situation for both Binance and Voyager, with Binance dominating a little.
As a major layer one blockchain, it is still holding on to a nearly 9% increase if we're looking back for the last 7 days. Obviously, the biggest movers involve Cardano, Solana, and ApeCoin, which we'll touch into a little bit later in the NFT space. But that's not the only thing that's going on with Binance. Their CEO outlines the ambitious plans to grow headcount up to 30% in 2023. I've not heard such bullish news because only just a few weeks ago, it was all the centralized exchanges making cutbacks and reducing workforce. What's actually changed, and why is this bullish outlook that CZ is coming out with?
CZ knows a thing or two about hiring the right people. Now he sees that Huobi is under threat. He can get good people from Huobi. We should remember that Huobi was a top exchange in Chinese market and in the global market just few months ago. A lot of smaller exchanges are also collapsing. For example, some Korean exchanges, some exchanges that are based in China, and all of these people will be jobless. So CZ can get them for cheaper without paying a competitive salary. When you get a lot of good people together working for an exchange, he can do wonders, right? Because he has at his disposal all these human resources. And currently, CC is the only person who can do this. And CC knows that on a good day, crypto pumps 30 to 40%. That's the yearly return for a really good stock market portfolio. I mean, really, really good. The average stock market return is 20% to 25%, while crypto does it in just one day or 1 hour. So generating profit isn't the issue because he knows that he also has a competitive advantage over other exchanges as Binance remains and still becoming the best exchange, best centralized exchange in the world. Binance will retain its dominance if more and more people are working for Binance. I see this as a bullish moment for crypto also because Binance is taking such a courageous action.
What I see is Binance dominating the space and this centralized exchange getting stronger and stronger and almost building the crypto ecosystem around itself. I don't know at this stage whether that's good or bad, but certainly the nearest competitor doesn't even come close. Is Binance the Google version in Web3? Yes, Web3 expands to a lot of technologies and different industry verticals. It seems that CZ is positioning Binance to be that centralized and central player within the Web3 space. Let's roll over and discuss this concept that Ethereum wallets significantly increase the usability of its wallets and ensure that users do not lose their crypto. This was a concept recently embraced by Visa, and it feels like Ethereum developers are onto something here with accounts on Ethereum or EOAs for short. So that's positive moves where Ethereum is concentrating on boarding users and securing its wallets. And its layer 2 chains, Optimism and Arbitrum, are flipping Ethereum in combined transaction volume. Again, another bullish moment for Ethereum and the wider crypto space.
Ethereum is just dominating the space right now. Imagine Optimism and Arbitrum are not even the biggest layer 2 solution, which is Polygon. And when you see that Optimism and Arbitrum combinedly flip Ethereum in transaction volume, it means Ethereum is not a retail chain anymore. Let me explain. The fees we have to pay for each transaction in Ethereum mainnet is around $5 to $20, and that makes it Ethereum an institutional chain, so that institutions like Optimism and Arbitrum can build solutions on Ethereum and provide them for a cheaper fee. We are talking about cents when you used to have paid in dollars. What will happen next is by the next bull run, Ethereum will continue burning a lot of tokens, right? Ethereum supply will be deflationary and price of Ethereum will rise eventually. That makes it more difficult for retailers to do a transaction in Ethereum. I believe by the next bull run, one Ethereum transaction could easily cost over $70. And projects like Optimism and Arbitrum can offer the same transaction for less than 10 cents. This is going to happen to Ethereum, and I'm not suggesting Ethereum will lose value. In turn, it will gain even more because now we have two feeder companies working for Ethereum. This is amazing. I think this is how big networks are built.
What's more amazing, as you touched on, that Polygon wasn't even mentioned, and that's another company that's heavily involved with the Ethereum ecosystem. Bullish news for sure. And I like your point where Ethereum is no longer a retail chain and is becoming an institutional backbone of Web3 and the ecosystem as a whole. Let's touch on Gemini quickly, as that officially terminates the crypto earn program amid DCG and the Genesis dispute. The Winklevoss owned crypto exchange, Gemini, are said to be returning customer assets remains as its highest priority.
We had discussed the topic last week because each of these centralized platforms they will at some point have to stop high earn rewards or high staking rewards. Earlier they were used to do this for promotional purposes for new users, but offering such insane APYs or APRs for customers is not sustainable at all. I hope you remember this was the same thing that happened in GameFi because play to earn disrupted the moment. Play to earn was not sustainable because it had an incentive behind retaining customers. The same thing is behind the earn movement. Now, the ease of transaction or ease of trading or ease of converting an asset into another was the main selling point of an exchange, while the exchanges added the earn feature as a selling point, and now that users are addicted to it. At some point, it had to stop, and it's better to occur sooner rather than later.
I'd have to agree. We've always been cautious about crypto earn programs and its sustainability. Let's close off now with a quick roundup of NFT news specific to the Yuga ecosystem, as that seems to be making the headlines today. The trial of Jimmy the Monkey, mint details will be announced very soon, outlining how next week's multi-week interactive mint will work. So that is super exciting for anyone involved in the trial of Jimmy the Monkey. Two other Yuga related projects are also in the news today. Mutant Hounds have their reveal today, which is highly anticipated based on its floor price jumping 40% in the past week to 1.8 Ethereum. The Mega Mutants are selling as high as 75 ETH. And staying within the Yuga ecosystem, Applied Primate Engineering is launching its latest puzzle as the team slowly released more details about the project and how its keycard will be used. The key cards are currently just over 1 ETH, down almost 12% on the day, but still 13% up on the week. There is a lot of volume and liquidity in the NFT space when we compare it just a few weeks ago. I think we can end the show here. That's a wrap. It's been super fun. I'm glad you were able to jam with us today. That's it. Until next time, thank you, everybody. Signing off.